this is the time, right? I have shared with you guys in the last couple of weeks that my intention of getting something in Vegas or Henderson, I'm going to be fairly aggressive July and August because I believe this is the time to really find motivated sellers, to write disrespectful offers, to follow up. As you know, it'll be peak uncertainty, it'll be peak seller stress, and then we see what we see come September. If you are in the housing industry, I've got good news and I've got some bad news. I now believe that the housing crash in transactions that we successfully called 4 years ago has 2 more months to play out. I believe July and August will be some of the worst transaction months of this period. But the good news is come September of 2025, to be clear, I believe we start building positive momentum, and that carries us through 26 and 27. I have long said that 2025 will be the worst of the 4 years. I now believe July and August will be the worst of the worst. But then, just like when you're going through hell, you keep going. We hit bottom, and we slowly build out of this. Now, to be clear, coming off the bottom, it's going to be a slow grind. But if you've survived these last 2 or 3 years, you know, you're almost done. Excuse me. So, you know, I think there's going to be a lot of positives going on in the real estate industry that is just going to make the fall selling season, which I will call September, better than most expect. I am not talking about runaway price inflation, just so we're clear. I am not talking price. I'm talking transactions. I think price will be relatively flat, as I've said all year. But when you look at GDP and you look at just all the contribution from housing is about 12% of GDP. And it has been, frankly, contracting for 4 years. I believe that ends in August. I believe July and August are rough, but we come out of that. So that's something I think about. Now, what about investors? What does this mean for investors? Well, first off, it's still a buyer's market for most of the country. Clearly, the Northeast, North Central, like Chicago area, Detroit, those folks still a seller's market. But this is the time, right? I have shared with you guys in the last couple of weeks that my intention of getting something in Vegas or Henderson, I'm going to be fairly aggressive July and August because I believe this is the time to really find motivated sellers, to write disrespectful offers, to follow up. As you know, it'll be peak uncertainty, it'll be peak seller stress, and then we see what we see come September. So that's something I wanted to get on record. So A, I can hold myself accountable. B, you can hold me accountable because I'm not afraid of being wrong. And we'll see what happens in September. So there we go. I do have good news for you. If you are part of my school community, I've got 2 events for you. Both have been scheduled in the last 24 hours. Tomorrow at 8 a.m. Pacific, you're going to get the opportunity to interact with Thach Nguyen. Thach Nguyen, if you don't know who he is, you're sleeping. He's came from Vietnam to the U.S. with $100. He's built, I think, $100 million real estate portfolio, one rental at a time. He's going to talk about the importance of getting to 4, the importance of holding to build wealth. And you're going to have the opportunity, if you're in school, to ask him questions. Again, this is something I like to do, bring in my friends to school so that you can ask him questions. So tomorrow, 8 a.m., we don't normally do Friday. Friday to 8 a.m. is usually out-of-state investors. They still will be doing theirs tomorrow, mastermind or accountability group. But that was the only time that Thach had available, so I took it. And then on Sunday, to continue the trend of having Sunday conversations every Sunday, except when I'm traveling. So last week we were traveling. But this Sunday, you're going to get the chance to talk to one of the top 4 real estate investors in my book, Jason Pritchard. Always a fun conversation with Jason, 8 a.m. Sunday. If you're in school, I just put the links for both Friday with Thatch and Sunday with Jason. Come join, get your questions. These videos may or may not end up on YouTube. Just get inside school. They'll be recorded and shared there. So have some fun with that. So talk to you guys Friday and Sunday. Talk about the Wall Street Journal. The Wall Street Journal is saying what I've been saying for a while, that Trump will nominate a Fed chair before next year. I think it'll actually happen this summer. Leading candidates for the next Fed chair are Warsh, Hassett, and Bessent. It's very clear that Trump has had enough with Powell. He is going to insert this new Fed chair. And again, this person is going to have no power whatsoever. However, they're going to be paraded around on every news network, every financial network, Monday morning quarterbacking Powell, and it might get very, very uncomfortable, and Powell might hit the eject button and say, hey, I'm out. You guys take it over. I'm gone. He may not. You don't know. But this is definitely something that Trump will be doing, as he wants lower rates. And, this is his way of perhaps forcing that to happen. We did get some earnings in the last 24 hours. Micron beat top line, bottom line, and raised guidance. The chip stocks should probably like that. Paychex missed on revenue but beat on earnings. And then finally, General Mills. What a nasty report General Mills had. Forecasted a decline, a decline of 10 to 15% next year. Yeah, that's not good. That's not good. Looks like Fannie Mae and Freddie Mac are getting ready to count crypto as assets for mortgages. I thought that was interesting. Again, if I guess you got some Bitcoin, it might as well count as assets. Makes sense to me. Morgan Stanley's making a lot of noise. Morgan Stanley still says 0 cuts in 2025, but get this, folks, 7 in 2026. So again, it's no cuts in 25, but 7 in 2026. And Jesse, you're absolutely right. Trump can't insert a Fed chair. I'm not saying he is going to. I'm saying he is going to nominate a Fed chair. And then that Fed chair is going to run around all the news networks and Monday morning quarterback Powell, at which point Powell either sticks it out or Powell resigns. And then the Fed chair goes through committee and all of that. So yes, I'm not saying he's just going to insert him, but I am saying he is going to make it uncomfortable, which is, again, something Trump, I think, wants to do, frankly. We did get a lot of Fed speak. Again, we're starting to see that the Fed is on 2 different sides. Some of them are talking July rate cut. Others are saying you're crazy. Maybe September. But here we go. Fed President Collins. I see core PCE inflation above 3% by year end due to tariffs. Tariffs to push inflation lower and growth higher. Wait a second. Tariffs to push inflation higher and growth lower. Sorry, mix those up. Fed President Barr, tariffs may cause economy to slow and unemployment rate to rise. Inflation set to rise due to tariffs. So again, you're clearly seeing a majority of Fed presidents basically say they are afraid of tariffs. They are specifically afraid of the next 2 months, given the base effect and tariffs, and they see stagflation environment. Fed President Kashkari, it is possible the Fed could cut rates if inflation high and the labor market deteriorates sharply. What did Kashkari just say? Basically said if inflation is up, the job market tanks, they will cut. Basically saying of their 2 mandates, again, in stable prices, aka inflation, or the job market, they will cut to save the job market, which is net new information. Fed President Daly, the fall looks promising for rate cuts. Tariffs will have a temporary effect on inflation, for which I say, Daly, if you really think the effect is going to be temporary, why wouldn't you cut earlier? I'm just asking. Makes sense. Barkin, still lots of uncertainty on tariffs and how it will settle out. Businesses are still in pause mode. This is part of the idea of what I'm thinking. Again, the housing crash in transactions ends in August and gets better in September. Is I think there's a lot of uncertainty that's going to be wrung out of the system, not only for the Fed, which clearly is uncertain given all their comments here earlier, but same for businesses and same for consumers. Consumers, I have told you for 5 years now, they can be scared or uncertain or conserved for 6 months. After that, consumers just go, I'm going to live my life. I'm tired of, this or that. We're going to go do what we do. And I think we're going to see a lot of that come September, with September being a stronger than normal real estate transaction market. One more for Fed President Goolsbee. If inflation stays in the range of 2% and uncertainty is resolved, the Fed will lower rates. The Fed needs to be sure on inflation, especially given June 9th deadline. I think that's reasonable. Again, if you don't know what he's referring to by June 9th, that is the 90-day pause with most of the world on tariffs. Again, I think we still only have one done deal. That was with the UK, which is interesting because we have a net positive trade balance with the UK. So something's going to happen. June 9th is right, or July 9th is right around the corner. And we're either going to get another 45 or another 90-day pause, or we're going to see what we see. So I think calling out July 9th, given the deadline, is fair, but we will see where we go from there. We did get some accountability groups. Again, if you're a part of school, you got 7 to choose from. Frank's groups talked about ChatGPT actually helping you create a buy box. I didn't even know that was a thing. I didn't know ChatGPT could do that. Pretty cool. Also, a contractor was reviewing quotes. A lot of you out there aren't contractors. We have plenty of contractors in our community. They will review quotes for you and tell you what's what. Jared, also leader of another accountability group, talked about leverage properties to scale. There's a new book that's being recommended in the group called Timeless Wealth. I'm about halfway through that book myself. It's a fun read. Talked about turnkey investments, student housing, and even questions about our Vegas event in February, which was a lot of fun. We did get some economic data today. Initial jobless claims did break. It broke lower. Came in at 236 after spending 3 or 4 weeks above 240. Unfortunately, continuing claims did come in at a high, the highest since November of 2021 at 1.97. This goes to my call that this particular job cycle isn't going to be about the unemployment rate. It's going to be about continuing claims. And we're seeing that more and more. Durable goods. Durable goods. Last month, negative 6.6. Durable goods, a massive beat, 16.4%. Now, a lot of that was because of transportation, airplanes, and the like. But yes, durable goods coming in at a monster 16.4%, where last month it was negative 6.6%. We did get our final Q1 GDP. Again, remember, folks, the first read was negative 0.3. It was revised to negative 0.2. It came in, its final revision, negative 0.5. So a pretty significant beat to the wrong side. Again, this is Q1, a lot of uncertainty going on. And the big adjustment was consumer spending. In the first report, consumer spending was estimated to be a positive 1.7. It was revised lower to 1.2. And in its final reading, the one that came out this morning, it was cut once again all the way to 0.5. So again, consumers were not active in Q1. I did, just for fun, check out GDP Now. GDP Now was last updated on June 18th. It will be updated again tomorrow. But GDP Now is calling for 3.4% Q2. Q2 is almost over. It's about 4 days away. And just for grins, I checked out Trueflation. Trueflation is up quite a bit. It was as low as 1.2%. It is now up to 2.22%. So again, right at that or really close to that 2% level. So again, folks, do yourself a favor. Join school, 67 pennies a day. You're going to get opportunities to talk to amazing investors. Tomorrow you get Thatch, and on Sunday you will get Jason. Also, I am actively working to get Bob Langworthy, the CPA I recommend on. He's doing some family traveling the next couple of weeks, but I am actively looking to get Bob Langworthy on with the school community as well. So if you want to talk to a CPA, someone that the lumberjack landlord and I use, good time to talk to Bob as well. All right, folks, take care of yourself. I hope to see you join school today so you can talk to Thatch and I and Jason and I in the next few days. Take care. Have a wonderful day. Later.